Good morning, good afternoon, good evening. Today's key theme from TenViz: a major cascade of sells across big technology as market de-risks and rotates outside of the US. TenViz has consistent sell signals across big tech. For instance, sell on Nvidia since December 31st, reflecting unrealistically high expectations. Yes, the DeepSeek awakening matters, but NVDA's claim to an everlasting hardware money-making monopoly doesn't make sense. Additionally, investors are cautiously awaiting financial results from key partners like Meta Platforms and Microsoft, which could influence NVIDIA's future performance. Sell on Amazon on January 27th, forecasting minus 7% in 1 month. Amazon projected Q1 revenue much below the expectations, citing concerns over slowing AWS growth. The company announced plans to invest over $100 billion in artificial intelligence infrastructure, leading to concerns about increased capital expenditures. Also, Amazon's cloud computing division, AWS, reported weaker than expected revenue growth, raising investor concerns about its performance. Sell on Tesla on February 3rd, forecasting minus 11% in 4 months. Tesla is facing declining sales globally, down 8% in Q4 2024, while its profit margins have fallen to 13.6%, down from 30% in 2022, due to aggressive price cuts, rising competition, and slowing demand. It's a disaster. On a personal note, sales for Tesla in January has not been good at all. Sell on Netflix also from February 3rd, forecasting minus 28% in 7 months. Going short on Apple likewise February 3rd, forecasting minus 11% in 5 months. Apple's Q4 revenue rose to 4%, but reported an 11% decline in sales in China. Alphabet missed Q4 revenue and plans $75 billion on AI investments in 2025, possibly risking misallocation of capital. AMD forecasts slowing growth in its data centers. Sell on Taiwan Semiconductor since December 16, 2024, forecasting minus 6% in 2 months. What's more, sell on technology indexes, US software and QQQ driven by money outflows into EM, Brazil, Mexico, Turkey, China, and Europe. And big tech fundamentals begin to disappoint, especially given high expectations. Consistent with de-risking in related asset classes. Sell on Bitcoin. Capital moves away from speculative assets into defensives. Sells on uranium ETF. Powers nuclear energy for data centers and chip fabs. Bitcoin is connected to the big technology trade through the same speculative retail ownership. How the market was distorted in 2020-2024 by retail ninjas, and why it is normalizing now. Since COVID, with government check handouts and many people sitting at home, even working from home, they started trading household name stocks, mostly big tech. Their ownership of big tech as a percentage of their portfolios is very high. I know many retail traders and RIAs with NVDA being 20% of their assets, and many of them trade on margin. Now imagine how nervous they get if NVDA drops 15%. They start trimming everything: MSFT, Goog, BTC, NVDA, Meta, etc. This has played out repeatedly. May 2022, Fed rate hike, November 2022, FTX collapse, and early 2023, liquidity concerns. We forecast that as retail traders begin exiting big tech, institutional active investors will start to outperform. Since no institutional investor is allowed to have 8% of their portfolio in NVDA, they have always been underweight. Could retail investors, to seeing non-stop losses in their concentrated positions, start panicking?